Joining us with his outlook today is Sunnova CEO John Berger. John, great to have you back. Thanks for the time. I wonder if you heard Pippa talking about some of the potential policy tailwinds, and I wonder, do you think that's still in the can? We're just getting started. Where are we on that?
Well, thanks, Carl, for having me. We're just in the early innings, but we're seeing a boom in residential energy, and it's really transformed at this point in time. So part of what's happening here is the residential, particularly behind the meter, has shifted. And it's not just about solar panels anymore. It's about batteries. It's about load management. It's about heat pumps. It's about generators and EV chargers all coming together to be operated on a software system and then supported to flow power when storms are outside or when heat is really draining the grid system. And we're really seeing a transformation of an alternative service of power. So essentially a competitive source of power or freedom to have more reliability at a cheaper price for your energy, not just for your home, but for your car as well.
Right. But do you think there'd be fewer concerns about residential demand growth if maybe, I don't know, electricity prices were higher than they are?
Well, they continue to move quite high, and we see actually constructive moves with regards to utility rates. Utilities are a socialistic system and communistic, even with some of the entities out there. So there's no capitalism, very little of it, inside the U.S. power industry. And so what we're seeing outside of the country, for instance, I was recently talking to investors and shareholders in Australia. They're seeing a lot more open market here where you can combine some grid power, some of the power from the solar, the batteries, the EVs, and that comes together in a single competitive source. And that's able to do things like get you free power, believe it or not, and then some payment on top, which is the case in some cases in Australia, because the energy on the wholesale side or the utility side is so expensive. And we're seeing that here in this country. We're behind on the regulatory side. We need to open things up and allow freedom for consumers to choose their power provider, and then power rates will fall. So we actually see the utility rates continuing to climb here for the next several years until regulatory change is implemented.
Interesting. John, you recently reported earnings largely better than expected, higher than expected growth outlook. However, the stock did decline, and some analysts are attributing that to just the need for potentially $75 million worth of equity. What are your plans on that front to go to the market, potentially raise additional capital, and what exactly is the size that you're looking at right now?
Well, we are very transparent, maybe too much so, as running a public company. It's very difficult to do, but we've tried to be as transparent and open and honest as possible. And when we laid out our capital plan, you can see our growth is not just strong, it's booming. And a lot of investors are looking at that and saying, I think I like this, but, where is the cash flow going to come from? Where's the earnings? And we clearly laid out that in the back half of this year, we're going to see a lot stronger adjusted EBITDA, and then we're going to see a lot more cash flow. And we're seeing a operating leverage, or basically our expenses going down per customer starting next year. So we're seeing very strong financial performance. We talked about that. We laid out very clearly the capital requirements there. We're well on our way to getting that capital and securing it. So this was really just looking at a long-term plan and saying, look, the business is quite strong. And look, we're doing something that's quite different. We're taking a lot of these homes that are our customers and businesses now, and we're connecting them together like the internet. And that is able to get more energy. Like, for instance, in Texas yesterday, where there was really high power prices, we're able to take some of those customers' energy and what they're not using and sell back into the communities. That gets more value. And that's what I was just talking about with Australia. That's the way the Australian market works, the Japanese market, most of the European markets work. So it's really more about how do we facilitate and get more earnings for the company, but also more value for our customers. So it's quite an exciting time. The power business and the energy business globally is changing.